Hello, ladies and gentlemen. This is Modern Investing on Pod TV. My name is Sasha Star. My guests today are Dr. Milan Sombarak. Welcome to the show, Milan.
Thank you for inviting me.
Great to have you. And Jim Ead from Ead Foundation. Welcome to the show, Jim.
Thank you so much, Sasha. Great to be here.
Great to be here. And today we are witnessing the last day before Thanksgiving in the United States, and we thought that the market would be more loyal to the people, investors, and it's not happening the way I thought. It's Wednesday, and yet it doesn't help, especially people who hold on to NVIDIA. NVIDIA is going through a corrective stage, and it's just a question of where the correction would found its support. From one point of view, it could be 131. Some other people believe that it could go all the way down to 111. We'll see which way it will work out. 131 looks like there should be support. Now the resistance around 141 and of course 150 still in place. So we'll see how market will develop. In the meantime, the usual question is what to do to sell and then buy it back once there will be a upward movement. I substantially reduced my position at 143 because when it failed to close over 150, it touched 152 something, but then it ended up the day around 146, and at around 143, it was clear to me that it will go lower. How much lower, of course, I didn't know. And even now, I still, I don't know. See, the problem is that why I substantially reduced my position is because I have many other investments related to NVIDIA. For example, I have NVDY, which is a dividend-paying ETF, and I hold on to that one, obviously because of the dividends, and I could be punished for my greediness here. But I think over the long run, it will pay out because last time it paid over $1 dividend. So with 10,000 shares, it's $10,000. If it's every month, you are rewarded for your risk-taking $10,000. That's not such a bad proposition, as long as you don't sell. If you sell, then you will take a loss, naturally. For example, today it was an announcement. I have a small position in Tesla dividend-paying ETF, TSLY, but there I have only 1,000 shares, and it declared $1.22. So I will get, on Monday, I will get $1,220 minus withholding tax, which would be around 12%, 13% maybe. So it's still around like $1,000. So if that will continue and every month it will pay these dividends, I'm okay with that also. So I have this as well as NVDY. Last time, and I still have position in Coinbase dividend ETF, CONY, CONY. And last time it pleasantly surprised me by paying over $2 in dividends. So with 5,000 shares, I was paid almost $10,000. So if it will continue every month, but you know what? If it will pay only $1 in dividends, it's okay with me. It's $2. I think it was a bonus. So this way, I'm sort of playing down this situation and waiting until NVIDIA will find its bottom, stay there. See, it has to become again very attractive for investors, because right now it seems to me that it's so popular stock that anyone who wanted for one reason or another to have NVIDIA already had it. So to find new, fresh investors or the same investors who already have NVIDIA to enlarge their position is becoming at least at this price, is quite difficult proposition. However, let's imagine that it will go down, not even 111, but say 121. So it was already 150. It's now 121. Okay, so it's a retracement of 20%. Maybe at that point it will be attractive again, provided that all fundamentals are in place. It seems to me they are. But we'll see. We'll see. Let's just play it and we'll just wait until it will find its bottom. It will stay there. It will stop going down. So any stock which is going down, you cannot touch. Remember that they're always saying about 7% rule? Right now in NVIDIA, it works perfectly. If you would sell NVIDIA taking 7% loss, I did even earlier. I got out of 143, but to me it was kind of obvious movement on its way down because it would break through 150, it would go to 160 or somewhat even higher, but it didn't happen. So it's going instead down. How much down? We don't know. So at least it has to stop going down. Once NVIDIA will find its bottom, whether it's 111, 121, 131, and it will stay there, it will go higher dollar or two, it will go lower dollar or two, and it will find its trading range. It will not going down anymore. That's where you can consider to a load on its shares. Right now, it's too soon because we don't know where is the bottom. Jim, how you're playing this downturn?
Well, yeah, I've been, because it's not just NVIDIA, it's the tech sector.
Yeah, it's all of it.
Yeah, AMD, Marvel, Intel, they're all down. Not down considerably, but yeah, I thought NVIDIA was going to find support higher. But, so how low it can go, I don't know. But I still have utter confidence that the fundamentals have not changed.
Yeah, agree.
There's a lot of profit taking coming around this time of year. People want to report that they've made a bunch of money for their investors, and this kind of thing is fairly typical. And I think we're going to see a January bounce in these stocks.
Could be Santa Claus rally.
Yeah, I just feel that, and that's an example of what's going to happen in January. And I think that, these things, the fundamentals are still there, the earnings are still there, and NVIDIA has positioned itself so well in a booming market. And so, they're even the go-to player in any of the robotics now. So, they're expanding beyond AI into, other fields, and their chip making I'm blanking on the chip developer that they're cooperating with it, but in any case, it's going to be still the leading chip for AI purposes. So yeah, as long as the fundamentals haven't changed, the revenues haven't changed, the report is outstanding in terms of revenues. I have long-term confidence in this stock, and long-term to me is, you keep evaluating every few months, but I don't mind a temporary downturn, because I attribute it a lot to profit taking, which it can make a lot of sense to a lot of people this time of year. So I have a strong belief in staying with these particulars in this sector. I have confidence in it, so I'm not sweating it.
Because any market rally isn't conceivable without participation of Magnificent Seven and all these tech stocks or so on. What's interesting, I've read one article a couple of days ago from a well-regarded analyst, and he is warning about downturn on the market, and his defense strategy to be in cash as much as possible. So once market will start recovering, you have a fresh cash going into the market, which is quite interesting. But then he's saying is that the cash itself is the losing proposition compared to stocks or any other investment. So what he's proposing is instead of cash, okay, part of course you need some cash always. He's considering hard assets such as number one, gold, and number two, Bitcoin, the cryptocurrency.
Wow.
What he's believing now is that cryptocurrency is becoming so wildly accepted and so popular. So it now competes with gold as a hard asset. I mean, in some situation, gold may perform better, but lately, Bitcoin and the related
It blows my mind. If you want to retreat to safety, go into crypto.
yeah. No, I'm not saying. You see, I have exposure to crypto. I'll tell you with
The CONY. Yeah.
yeah, the Coinbase, the paying dividends ETF, and I have another one which I initiated. Unfortunately, last week. Unfortunately, I made a mistake. I've looked at MicroStrategy and its ETF, MSTY. Now, what's interesting is that it's quite expensive. At that time when I purchased it was around $40, and they paid dividends $4 a share.
Whoa.
Again,
That
just
caught your eye.
look, because of my greediness, I couldn't resist. But because they're expensive, I bought only 200 shares. And I thought that, okay, it was a reporting day. So I thought that I would get dividends on that month, $4 a share. So, okay, so even if it's expensive, even if I will be suffering a paper loss, but this dividend, $800 on 200 shares, will offset these inconveniences. Now, what's happened is that apparently you are paid dividends not on the reporting day, but on settlement day, which is next day. So my shares which I bought, they would be settled only next day, which is 1 day late for collecting dividends. So I got the 200 shares, but I was not paid dividends. So I'm foolishly lost $800. Or I didn't lose them, but I didn't get them. But I was counting on. So, okay, I have 200 shares. At least I initiated the position. And maybe next week, 2 weeks, I have still more time. Maybe I'll increase my position. But right now, 200 shares, it's okay. Even if it will not pay $4 dividends, it will pay only $2.50, maybe $3. I will be happy with that as well. So we'll see how it will play out.
Right.
And Milan, how you're playing this situation in the market?
During their annual meetings of the Berkshire Hathaway, Warren Buffett would, in his charming way, say, I can see, and my partner, Charlie Munger, can hear, and between the two of us, we can cover a lot of territory. Then he would go on to talk and talk and talk, and then finally he would say to Munger, what would you like to say? And Munger would say, I have nothing to add. Well, that's not the case with me today. I
think Munger has passed away quite a while ago.
Yeah. And he was close to 100. I don't think he was quite 100. Close to it.
He was close.
Yeah. But so I have a lot to add from what you were saying today. For instance, you talked that you made a mistake. And we state that mistakes are practice shots if you learn something from them. So did you learn something from that mistake? Was it a useful practice shot for you?
Yeah, that's okay. So you know, some people charge $400 an hour for investment advice. So I spent 2 hours of very valuable investment advice, but I think I got some use of my mistake.
Well, good to hear that. Now, American presidents have a charming habit that a turkey that is fed every day starts to believe that being fed every day is the law of life until the day before Thanksgiving, then suddenly, boom. And American presidents have a charming habit of pardoning two turkeys. Yeah. So we don't do that in Canada, but you know that long-term capital management looked like a turkey in the United States. It just kept outperforming the rest of the market enormously until the day before Thanksgiving when it tanked. And so now American presidents can pardon two turkeys, but I don't think that happens in Canada. And I don't think it happens with investments either, because when you take a look at the long-term capital management, it looks just like a turkey that's fed every day until the day before Thanksgiving. Boom, long-term capital management look exactly like that. So,
Milan, excuse me, I would like to disagree with you on long-term capital management.
well, then
I
you're,
think
then
that,
you're wrong, but carry on.
yeah, they were run by very distinguished people, including Nobel laureates or so on. And in the long run, if their strategy was brilliant, and it would work if they would have access to more capital to cover the margin call. Of course, all banks refused to provide them the money because it was absolutely incredible opportunity to kill the very viable competitor. Same thing what happened with Lehman Brothers, but even it was even more obvious with long-term capital. So I wouldn't bash them and criticize them. Okay, they were high flyers. Okay, finally they dropped dead, and that's a lesson for investors to learn. Okay, it's going well, it's flying up. Okay, now it's down. Bravo. I wouldn't take that position on long term.
If they had quit early enough, they would have done very well.
What do you mean quit? They were in their element. Their positions were properly calculated, and they usually had enormous access to capital. They never had instance that they were short on capital to cover their positions. So that was the only one, and the only one instance when they were refused capital, and that went to their downfall. So that's the lesson is, if there is any lesson for us to learn, is that you have to be very careful when you are, especially if you're playing on margin, especially if you feel overextended. That I feel I'm overextended now on this dividend paying ETFs. I definitely do feel, especially now when for obvious reasons they're going down, even if they're paying dividends. However, you have to take a longer look than just last 2 days, and if you look a month ahead, better 3 months ahead of time, or even a year from now, I think that will be rewarded. In my situation, I'm playing with house money. Not that I'm easily going to get it back to the market. It's not going to happen. But I'm watching it and trying to be a little bit more balanced, to have a balanced view of what's happened months from now, 3 months, a year from now.
Well, what I wanted to say actually is that the way the American president pardons two turkeys who will not be executed the day before Thanksgiving doesn't happen with securities. Securities that tank will not be bailed out the way those two turkeys are bailed out by the American president.
Hopefully.
Well, Milan, speaking of those two turkeys that are pardoned, I was going to tell you because I mentioned on our news show yesterday, the two turkeys' names are Peach and Blossom. So that is the name of the pardoned turkeys in the year of 2024. But I did have a question because I know sometimes y'all talk about the investments that are seasonal. And there is a particular seasonal investment that probably with going up in investment credit this particular year and everything, but now they've run into trouble and everything because apparently the turkeys are being abused because there was a notion of Butterball being a very popular brand, and apparently Butterball, there is some accusations that PETA is putting out that the turkeys were literally being abused and everything. So I was just wondering, Jim, your thoughts about Butterball as an investment, because it is a food company and all along those lines, and will negative news impact the investment?
Well, there's two things I'll say to that. One is it's beyond my area of expertise, and so don't listen to what I say. And two, sometimes the negative publicity is a buying opportunity. Look at the fundamentals of the company. You know, is there revenue? Yeah, that's good. Is there debt? That's bad. So, you know, if you analyze it from that point of view, then you know, you'll know that this is either a buying opportunity or a sign of more bad news to come.
Jim, what you said is absolutely true, not sometimes, but all the time, if you pick the American economy as a whole by buying an exchange-traded fund which tracks the S&P 500, and SPY happens to be the best for a whole lot of reasons I'll go into if necessary, but there's no need for that. So happens all the time if you don't pick stocks, but buy the American economy as a whole. A decline in the American economy as a whole is definitely a buying opportunity. So Sasha sells a 7% drop, but if you own the American economy as a whole by holding SPY, when it drops, you buy more. All the problems that you're talking about here arise from picking stocks, which we discourage. We tell people buy the American economy as a whole, the strongest economy that the world has seen in 200 years. Will it be any different next week, next month, next year, next 10 years? Very unlikely. So buy the American as a whole, and when it drops, buy more. And when it drops, buy even more. There was a prominent dentist who took the same course that Warren Buffett took. He was a little older than Warren Buffett, and he said, keep your money half in cash and half in the market. The market, not an individual stock. When the market drops 10%, put a third of your cash in there. And when the market drops another 10%, put all of your cash into the SPY.
Hey, Milan, I've got to tease you because I wondered, could I invest in the doctors and everything along those lines? I know you used to be a dentist. You talked about being a dentist several times on this show, and I went to visit my eye doctor. This was for a simple pressure test. You know, they want to check for glaucoma and things along those lines. I can tell you that I dropped $135 on this quick 15-minute visit and all along those lines. So if the doctors and the eye doctors are making that kind of money, one, I think I went into the wrong field, and two, maybe I should invest in an optician's office and all along those lines. But I'm thinking,
do you have any idea, Mark, what the expenses are for an optometrist or for a dentist? You know, if a dentist took $0 income, none at all, took no money at all, dentistry would still be expensive. The cost of setting up is unbelievable. You know, it's not like buying a restaurant. A dental practice costs something like $10, $12 a minute to run. So you want to buy an optometry practice or invest in an optometry, you only do so when you understand the costs involved. They're significant. You'd be much better off owning the American economy as a whole. And when it drops 7%, you buy more. And when it drops another 10%, you put all your money in. And if it drops even further, you can borrow to invest.
No, and you know what? The more I think about it, it's what people call a stock market. Some other people call it a market of stocks.
Tell me the difference.
Okay. Okay. It's a semantics. Maybe it all means at the end of the day the same thing. But what's more important is that even your cherished SPY, it's nothing more than a basket of 500 stocks.
Including some bad ones, sure.
Okay. There are some bad ones. We all know that. So these stocks, the 500 stocks, they have their individual characteristics, and they are doing essentially what all market or all stocks are doing. They have their distribution phase, then they have accumulation phase, and so on. So the only thing what S&P is different from individual stocks, that there are 11 groups of stocks all economy, right? And so they're not doing all that at the same time. They're doing it in stages. One group is doing this way, and another group is going that way. So it's balancing each other, except that because the time periods are different from them, and because of the economic reasons, there are some situations when all 500 stocks start to behave in unison, and at that time either they keep going higher, all of them, or they going sliding all of them down. And in the situation of 2008, so it would lose 50%, if not more, and then it would take several years to recover, and so on. So
A rising a rising tide lifts everything, garbage included.
yes,
And a falling tide, everything declines, quality included. So the thing to do is to own the American market as a whole, which has been the best investment, collectively speaking, for nearly 200 years. That's unlikely to happen. And all the difficulties and the problems that arise that in the individual investors in individual stocks face arise from the fact that they're picking stocks. If you stop picking stocks but buy the American market as a whole, you're going to do well 10 years from now, 5 years from now, 3 years from now, probably next year too.
how much SPY made in the last 2 years in percentage points?
Well, I can tell you from memory, in the last very long period of time,
Approximately, it doesn't matter to be exact.
10%.
10% in 2 years, yeah?
And not inflation adjusted. Inflation adjusted about 6%.
Okay, I agree that it made in last 2 years even 20% profit. Okay, so 2 years ago, I would put $40,000 in SPY and I would make 20%. That means that today I would have $48,000. Would you agree with that?
I didn't catch the math, but probably you're right.
Original $40,000. It made 10% 1 year and 10% second year. So approximately 20%. It's $8,000 from 40,000. So 40,000 plus 8, I would have today $48,000, right?
Mm-hmm.
Well, what if I'll tell you that I have today $300,000 and I cashed out 40,000 that I originally invested in this project? So I netted, instead of $8,000 as you propose, I netted $300,000. Feel the difference.
Let me give you my response to what you just said. Doesn't matter what you have invested in, there will always be better investments. Always. So, people maybe don't understand this aspect of things, but something that has done much better than the stock market has been violin bows. A violin bow that's quality, high-end quality bow can buy 2 Steinway grand pianos. So if you're in the music business, would you rather handle a 63-gram bow or 2 Steinway grand pianos? But you have to move and take the legs off and disassemble and then reassemble and tune and so on. Yeah. So there will always be better investments than the one that you have. So
I would love to be an art collector, but I am incompetent in that field. So what I would invest, if I bought it for investment purposes, I would end up being a loser.
Ironically,
you bought a banana taped to a wall.
But ironically, just along the same lines, one of our other producers here on the network, ironically has the same last name as I do. We met earlier today because he's talking about his show, which is about cybersecurity, that being Rex Lee and everything. But he has a interesting collection. He has a collection of football cards, and he said that some of those cards are worth multiple thousands of dollars and can get up to as much as $60,000 or big investments like that. And he seems to know what he's doing because he has some major players like Fran Tarkenton and Dan Marino and a bunch of other names, including some because he's in Houston, that were in that field. So he's making a substantial investment because he got those as a kid. He literally started the collection when he was a kid, and I think he told me he's a year younger than me, so like 61 or something like that. But he got those investments and has kept them in immaculate condition. Yeah. He showed them on the Zoom call and everything. So Sasha, that seems like that would be one of those fun investments that could actually work and everything along those lines. I was actually joking with, and then I'll let y'all go back to the conversation. I was joking with Jim in the conversation because that optometrist that I was talking about also told me that they were looking forward to on Thanksgiving their pecan pie that they love eating on Thanksgiving dinner. So I was jokingly saying, well, maybe they ought to invest in pecans. But if you know anything about North Carolina, pecans are like a dime a dozen around here, just like Christmas trees, because a lot of the Christmas trees that people get around the country and in Canada literally come from North Carolina, because we have evergreens. So those Christmas trees are actually popular here and actually grown here in this area. So it's like a commodity that's one of those commodities that's probably too big, I would imagine, because I don't think that investing in pecans would make much sense. I could probably go outside and, like the squirrels around here, get tons of pecans and everything, because it's just so common.
Yeah, my poor mother threw out my baseball cards, including a Mickey Mantle card.
Oh no!
I still have a Yogi Berra card, but that's the only one that I have, and it left. But I do know people that kept them and sold them for a remarkable amount of money. But yeah, these types of things, if you have an eye for it and if you know what you're doing, and I think that goes for investing. If you have an eye for it, you know what you're doing, then by all means do it. But if you don't, have the self-awareness to realize that you don't, and Milan's strategy would be ideal for someone like you.
How much do you need to know to buy the American economy as a whole?
Yeah, you're absolutely right. And for people that don't have the feel for it, don't have the experience, that haven't lost money and learned some lessons, that's it. I think your advice is excellent.
If you like what you're doing and you can spend a lot of time at it and enjoy doing that. By all means, you should do that.
There is another factor is it's a love of competition.
Yes.
I love to get paid. I like to make money, but I also
Greed
like
is a factor too.
element when I'm selling options, puts or calls or so on. On the other side of transaction, there is someone 9 times out of 10, it's a market maker. So I enjoy being on one side of the transaction against professional market maker.
Yeah.
And the fact that I'm winning this transaction, it makes me even more happy than whatever money I'm making out of this transaction.
Yeah.
So the fact of competition, which I wouldn't have in case of SPY, and that's something irreplaceable. That's something that you should cherish as well, as the fact that you enjoy selecting stocks the right place at the right time, right stocks. All that, of course, requires Milan absolutely right. It requires time, expertise, experience, confidence. So there are many factors. So again, the average man, I think he should just follow your strategy. Your strategy is really great for average, know nothing people, and that way, okay, they will not do that well. As my example already,
Yeah.
I'm already indicated what would happen in one case was $40,000 investing in SPY, and another one doing the my way, and feels a difference. So, but for average man, for housewives, for optometrists, for no nothing. Actually, the doctors are the worst investors of all time. There is nothing that you can compare to the medical doctors, with all due respect. However, your strategy of SPY is perfectly suited for these people, housewives, students, destitutes, and criminals, and whoever.
I have a son who has got an engineering degree and an MBA, and he's a Google products expert. And he makes most of his money being a Google products expert. And he says the average American is below average. I don't think I'm not sure that that's possible, but
Garrison Keillor would argue it differently. Everyone is above that.
For below average, you have to create a new SPY 250 instead of 500. Select the worst 250. Let them buy them.
No, but we've had this discussion before, and it's really and Milan agrees that if you have the interest and you do want to expend some time doing the research, And I have found, and I think the competitive aspect is alive with me, and there's a little ego gratification. I would be lying if I didn't say it wasn't true. If I see something that's going to be a new investment opportunity, and I get in early, that's very gratifying to me, because not everyone saw it, and that's been the type of thing that I think can pay off. And if you get it wrong, why did you get it wrong? And be honest with yourself. And so it's part of it is discipline as well. Don't get emotional.
Sasha mentioned earlier, respected analyst. No analyst except Morningstar is respected because they're all in somebody's pocket. They recommend what the company that their company is invested in recommends. None of them can be objective except for Morningstar. So that's the only analyst that we should pay attention to and ignore all the rest.
I will mention two more. Maybe they are not as great as Morningstar, although it remains to be seen. So one source is definitely Investors Business Daily, because it gives you detailed picture of stocks with its numbers as relative strengths, whether it's in distribution or consolidated stage. It has 5 or 6 parameters that you can, you may say that they're being paid. Well, actually, they were acquired after William O'Neill passed away. A few months later, they were acquired by Wall Street Journal. But nothing really changed there. There is the same people working, the same very detailed analysis of the market, of individual stocks, and so on. So another one is, obviously, you are aware of Zacks reports. I read them from time to time, but to me, Investors Business Daily is much more detailed and specialized publication. I read Morningstar's as well. They avoid giving you a detailed picture of stocks. They're not providing numbers what provided by Investors Business Daily. They basically pick the picture. It's a great company or so on. Probably it's overpriced now, so you have to be cautious or so on. Okay, that's fine, but I'd like to see detailed picture. And what actually got me a little bit worried is that in the last few reports on a column of distribution and consolidation, the NVIDIA got rated as D minus.
Whoa.
Yeah, that got me worried. That's why decreased substantially. I sold shares at the 143, as I said, but I still have exposure through December puts, 150 puts.
Yeah.
I sold 20 puts, so most likely I will be exercised, so I will get another 2,000 shares of NVIDIA anyway. Now, if that will happen, and NVIDIA will be, say, 121, 131, or whatever. Actually, it's picking up right now. It's almost 134. Never mind. If that's happened, I have a strategy of selling deep in the money calls, very high long-term calls, such as I would go even to September 2025.
I was going to ask you, what's the expiry date? A few months from now? Expiry date?
Well, right now on the puts, I have expiry date December 20th.
You know that the best returns, unquestionably, 16% annually, come from selling covered calls, and you keep selling them and taking in the premium income, and keep doing that until you're assigned. When you're assigned, you're in cash.
It's fantastic proposition for those who have a large position in SPY. People who don't have position in SPY, they cannot do that strategy. They will be taken out to cleaners and very quickly.
You're right, Sasha, but what's wrong with having a large position in SPY?
you need a large sum of money, preferably $1.5 to $2 million cash.
Oh no.
Would provide you with a nice, good position in SPY, provided your strategy is to have half of your money in cash. So if you have, say, $2 million, so you keep $1 million in cash, or buy cryptocurrency if you want, and how you buy SPY, and then you can do this strategy what you just described. Other than that, you
all
can
you need is to do that. All you need is 100 shares of SPY, which will cost you about $60,000. We're not talking millions here. We're talking $60,000, and you can, in your margin account, put all your money into that, and that 50-50 can go in other accounts that you have. Most people will have more than one account for
okay.
sure.
So
It's
if
almost
it's
exactly 6,000 right now, 6,000.03. So what you're saying is correct. 60,000 would get you 100 shares.
Yeah.
okay, if that's the case, so you spend okay, so you put actually cash only $6,000, right? You don't put 60,000. You put only $6,000
You,
to
you,
buy shares. Now,
Yeah.
imagine that SPY in a day, maybe in 3-4 days, it will go down 6%. So all your investment is wiped out. It doesn't matter what you collected as a call, but you're wiped out. You have to start all over again
no, no,
because
no,
you have zero left.
no. If you have a margin account,
Yes, I'm talking about my.
invest in SPY, which will cost you about $60,000, not $1 million, $60,000, and keep collecting the premium income when you're assigned until you're assigned.
There will be no premium income. You will get margin call in 4 or 5 days. And unless you will bring more money, which according to William O'Neill, you never should consider doing, you will be wiped out. There will be no SPY on your account.
Why you need a margin account, Sasha? In Canada, you do, because American investors can write cash secured puts in
There
their.
will be nothing to write. You will be wiped out. Simple like that. Your investment will be gone. Your $6,000 will be done. So
You-
then you have to bring your new $6,000, or you maybe you will select to, I don't know, drive Uber car. I don't know what you're gonna do. Your investment will be done. Period. There will be no calls or puts or SPY or nothing.
Sasha, if you have owned the American economy as a whole, it will be wiped out. Hello, the American economy.
No, American economy will never be wiped out. Your investment will. Your $6,000 will be wiped out. Not American economy. It's a big difference.
Well, we have a new shirt. And
This is one of my old shirts, Jim. But when I get over to California, you and I are going shopping. That's the deal. I don't care what the girls think. You and I are going shopping. I've got an American Express black card. We're going to have some fun because I think you've got a similar style to me.
yeah, I'm definitely losing the shirt game today.
I actually bought this in Florida, and it wasn't even on special. I actually paid 110 US, I think, for it.
Oh, wow.
But this was a few years ago, so they have a few new versions of this shirt, and I can't get them here in Australia. So I am definitely going to buy the next one when I get to America, because my cousin, who's essentially my brother, he is trying to steal this shirt from me. So I definitely have to get some new ones. Milan, I just want to talk about what I didn't hear everything you guys are talking about. I just want to weigh in on a couple of things though. There are other considerations. So I've obviously said to you many times before that I think it's worth people who are going to take a position in the market at all to maybe be a little bit more strategic, right? So, you, for example, can choose to bet that the small and mid cap stocks are going to outperform the bigger cap stocks, or the opposite of that. There's lots of different indexes that you can invest in. You talk about the S&P 500 as being a great way of investing in the overall American market, but the bane of my existence, as I always talk about, is the tech sector. But the reality is, as Jimmy loves, The reality is that the tech sector outperforms the rest of the market. So actually, if you were going to try to place an investment, try to place some money in something that was going to outperform over time, it's actually the tech sector, because it's innovative, it's new, it's young, it's where you find the most amount of growth. So you'd be better off taking just one second. You'd be better off taking an ETF over that. But the main point that I would actually try to bring up to you is you wouldn't use, if you're talking about Reg T margin, which I assume is what you're talking about, as opposed to portfolio margining, you wouldn't use your Reg T margin account to buy the S&P 500 ETFs. What you would do instead is you would buy S&P 500 futures contracts. Now, if your American futures contracts actually have, well, not all of them, but some of them, as I say, have the 60-40 rule on capital gains tax. So you get a better capital gains tax or a better overall taxation treatment, as well as the fact that if you account for the rollover fees of the futures contracts, you'll actually find that would be more cost effective than investing in an ETF and paying the management fees. And additionally to that, what you'll find is that you have less margin requirements. So instead of investing 60,000, you could get away with investing, leaving 10 or 20,000 in your account to have the same size position, and the other money, the other 40 or 50 grand that you've got, just put it into, the money market and just sit there and cop your 5% interest and roll that over. That would actually be the same position as what you're suggesting, but would come with a higher return. Now, I understand that's probably not for everybody who doesn't understand the financial markets, but I would dare suggest that if you are sophisticated enough to want to say, I'm going to take my money and put it into the overall market, then you should be sophisticated enough to look at other obvious and simple strategies.
Shaquille, I'm going to give you an investing lesson right now. How much did you pay for
That's brave.
how much did
I
you
do
pay
it all
for
the time.
How much did you pay for that shirt?
How much did I pay for this shirt? I paid $110 for this shirt.
Now, do you have the equivalent of Winners in Australia?
Of
Winners. Winners is a shop that sells acquired products at a very low price. I can buy that shirt at Winners in Canada for $4. Absolutely, for $4. So
You could probably buy his shirt in a couple of years.
look, I can go to India and get the shirts made a bit cheaper. But the fact of the matter is that I, like most Californians, would go to Oregon, and when I came down from Canada, I went to the DFO stores, and I didn't see this shirt. This shirt had only just been released the previous week, and I saw it in a couple of stores in California. I saw it. Actually, I did buy it in Oregon. I then saw it in a couple of stores in Florida. And when I went back to Oregon, I paid the full freight and bought the shirt just because I liked it so much.
But I'd like
And
to
you know
mention,
what? And you know what? It's worth every penny, because I don't see many people wearing this particular shirt. It's a brand name shirt, but I don't see many people wear it. It's colorful. It suits my personality, and I get a lot of compliments on it.
Few people
okay,
can pull
I
it off.
want to tell you something. This shirt that I have on me right now, my wife bought it as a present to me. And it's a cotton, it's very good shirt or so on, and she paid for it $140. And I asked her, for this you pay $140? I wouldn't pay even $20 for this shirt. In a few weeks' time, we were in Aruba, and I saw the same shirt, and it was $185 US. And then I kissed her and said, you made a wonderful present, well selected, fantastic shirt, and relatively cheap.
The problem is that Aruba hasn't followed Donald Trump's policies, right? Because they could have bought the shirt in from Canada, put a tariff on it, and sold it for $170.
But Shaquille, along those same lines and everything, I'm just wondering, because I have gotten some nice shirts, including some shirts that look almost as colorful as that, and everything from our neighborhood thrift store. So if I wait long enough, won't you come in North Carolina and give that shirt to a thrift store, and I'll be able to get that same shirt at the thrift store, because that's where a lot of people do their buying at thrift stores. or
You'll have to fight. You'll have to fight my cousin for this shirt, and he's bigger than me. He's 6'4", and he wants this shirt. So you'll have to fight him for it. He actually stole it from me last time, and I said, "Look, I've got to take it back because I always steal his clothes." But I said, "Look, I have to take this back because I'll get another one, and then you can have it because it is my favorite shirt." But look, I think when it comes to international trade and stuff like that, I have the great benefit of being able to travel around the world quite frequently. And so what happens is when I get to the United States or the Northern Hemisphere in general, but especially when I get to the United States, when stuff goes on sale, like when you have like the end of summer sale, because stuff is going out of fashion, well, we're just going into our summer here. So what it means is that I'm buying stuff that's like really, really cheap. That's like, 70% sale on right now. And I'm like 70% off. Also, I'll go buy it because it's about to be at its full price in Australia. And of course, the same thing happens for the winter. And, the Southern Hemisphere is not quite as populated. So, mind you, on other stuff like, but one of my friends asked me to buy a pair of high heels and a handbag for his wife, and it wasn't cheaper anyway. I ended up paying $9,000 for those two items. So, but hey, it's his money, and you know what? What's really interesting, I think, is that most of the shirts and clothes I get compliments on are actually the stuff that I don't pay very much for. I'll buy like a shirt for $10 or $20 when I'm traveling in Fiji or Tahiti or something, and that's the stuff that everyone loves. It's not the design label stuff.
But Jim, along those same lines and everything, because I was joking, but I wasn't totally joking, because I remember going to a festival that did not have the suit because it was going to be a kind of a black tie event and everything like that. So I literally got the suit by going to Goodwill, which is a major investment that some people are even into and everything along those lines.
Oh,
so
sure.
I just wanted your thoughts around investing in kind of like clothes that are secondhand, because I actually think that it can be a wonderful thing can happen, and even if you're in a crunch period, and I'm sure you've had that happen to yourself as well, Jim. But I don't want to speak for you.
No. Well, I have a friend who, Atherton is a city right next to ours, and it's very affluent, and so he always mentions, he goes to the thrift stores because the Atherton people are always giving their great clothes away, and he gets them for a tiny fraction of what they paid for it. So he feels really like a mover and shaker when he can pull off a high fashion, old but and used shirt that still looks new.
The best suit that I bought, I went to Canberra for the first time when I was 18 or 19, and Canberra is our capital, so it's the Washington DC of Australia, and of course you've got who's there, all government people and international diplomats and all that sort of stuff, and a lot of them get clothing allowances, so a lot of them will wear a suit once and then to charity. So I went down there, and my girlfriend wanted to go into the thrift store, and I was like, what are we going there for? And I ended up buying many more things than she did after I went in there. But I bought this suit. It was a gorgeous grey suit. I actually still have it. It's just that I'm a little fatter than I used to be, so I can't wear it anymore. But I bought this suit for $6. Took it home. It was such a gorgeous suit. Looked it up. This is 20 years ago, in fairness. Looked up the label. It was a label I hadn't heard of before. Looked up the label when I got it home, and it was an $1,800 suit. And I have to tell you, I'll be honest now, I used to go down to Canberra quite a bit to hunt through those thrift stores when I was trying to, make a good impression as a young junior broker, and I wanted to wear all the expensive suits, but I didn't have the money to do it. And the stuff that you could get for under $50 was pretty amazing. But Milan, I think we've sort of gone off topic with talk about clothing, but this has really been how I've looked at the markets. Right? Why should I tie up $50,000 of my money if I can get the same result and only tie up $5,000 of my money? And that's the thing. When I talk about smart investing, it's not just about leveraging, but it's also about why take an ETF if I can take a futures contract.
But if you take a futures contract, what's your risk? I think that's the question that comes to my mind.
So, but it's the same risk, right?
Same?
Yeah, absolutely.
Okay.
So there's leverage involved. So it depends on how you look at it, right? If you've got the entire amount of money required to buy the entire S&P 500, and I mean, like, go and buy each individual stock, forget about brokerage. If you've got the money to do that, great, go do that. But you're tying up all of that capital,
Right.
right? Hedge funds and mutual funds, investment funds, pension funds, they all do that because they have to, right?
Shakil, I think
Don't
there's misconception about what you are discussing right now and what Milan is proposing. You are trying to improve on a strategy which is proposed by Milan, but your strategy involves a little bit higher level of sophistication of the investor than in Milan's case. Milan's case is for widows, orphans, dentists, and all
but they
And-
again, they can do the same thing, Sasha. They can do the same thing, and yes, it's slightly more sophistication, but it's not much. Because if I could just finish what I was going to say, so if you've got the money to buy the entire index, then you go ahead and do that. Now, most people don't. So what do? They go and buy the ETF. One of the good things about the ETF is that you don't need to buy the entire market. You can, if you've only got $100,000 and you buy $100,000 worth of the entire market, right? That's what an ETF does for you. The same sophistication that it requires for you to buy the ETF is required to ring your broker and say, what I want you to do is I want you to buy me the futures contract and continually roll the futures contract indefinitely until I tell you otherwise, and tie up the rest of the money in interest-bearing securities. That's the same sophistication.
It's not. It's completely different level of sophistication what you're just proposing. Milan's strategy could be explained in 10 minutes to 8 years old kid, period, full stop. Your strategy requires a 15 years old kid with some education and some inclination even to listen to what you are proposing. Most people don't have it. They don't need that. They want something simple, something stupid. Okay, this is what everybody does. I'll do the same thing, and God helps me, and that's the end of story. So you are talking about from this level to that level, and
the best
you may be right, Sasha, but let me tell you that I started off in the futures desk, and I'm a tremendous salesperson, or it certainly was back then. So maybe if it takes 10 minutes for Milan trades with the 8-year-old, maybe give me 12 minutes. I reckon I can get them.
The best investment that I've ever heard of works if you are a violin player. A friend of mine, a brilliant violin player, bought a Stradivarius about 50 years ago for the price of one Toronto house. He recently sold it for the price of 3 Toronto houses. Paid about, he got $10 million for his violin, having used it as a tool his entire career. Now, a plumber's tools decline, a dentist's tools decline, everybody's tools decline except violins and violin bows. Everybody's heard of a Stradivarius. The equivalent in bows is bow maker, French guy by the name of Tourt. And a Tourt bow today sells for $100,000. This violin player sold his Stradivarius for $10 million, having bought it for a fraction of that 50 years ago. Used it as a tool his whole life. You take a look at a symphony orchestra, and that doesn't happen to oboes, and it doesn't happen to French horns, and it doesn't happen to anything except string instruments, which, if correctly chosen in the first place, appreciate in value enormously. A tool that does not depreciate only works if you're a string player.
I'm not going to read any more of Jim's books on chess. I'm going to start learning how to play the violin and learn about instruments. But
yeah, which chessboards appreciated like that.
Some have, haven't they? Some of the old ones have. Look, I think the point that I'm trying to make, though, Milan, is, I think people that run their own businesses are more likely to want to get involved in the stock market, and they understand certain things, right? If you can buy things on the wholesale market and then you can sell it at the retail market, there's a markup that you can make. People get that. People understand there's less risk if you can buy something that you can eventually sell. I don't think that there is too dramatic a learning curve between ETFs and futures contracts. Look, there is a substantial learning curve if you're going to start trading the options contracts based on their Gregs. There's a substantial learning curve if you're going to start trading volatility or interest rate derivatives like I do. I appreciate that. But I think when we're talking about really simple strategies, I don't think if you can explain what an ETF is, I think you can explain what a futures contract is.
Do you agree?
And I think that people would understand that. And I actually think that people, it doesn't take long. If you've got to listen to somebody for half an hour, most people will understand it. And that's what I found when I was on the futures desk, was that most people will understand it pretty quickly.
Well, I only have a 20-second attention span.
If you want to learn to play the violin so that you can invest in violins, that makes a lot of sense. I've been playing the violin for nearly 80 years, and I'm not getting any better.
Anyway, but you're getting much better at investments, and this is really great. And I would like to thank you all for today's program, and have good luck in your trading, and see you next Wednesday, same place, same time. Okay.
Thank you all.
Thank you very much, everyone. Bye-bye.